All right, we're now joined by Matt Hougan, CIO at Bitwise Asset Management, to discuss, of course, the upcoming Bitcoin halving event and its potential impact. Matt, really appreciate you being here. So we've been talking about this thing for months here, and now it does appear as if it's finally going to occur here sometime within the next few days. The update is set to remove roughly $10 billion in annual new supply from the market, according to research from you and your colleagues over at Bitwise. How exactly will the BTC halving impact the overall Bitcoin ecosystem, you think?
It's a great question. Thanks for having me. You can think of it in a couple different ways. One, to sort of get out of Bitcoin for a while. If I told you that the amount of oil coming out of the ground next year would fall in half, you'd probably be relatively bullish on the price of oil. And the same thing is true here. We're removing half of the new supply that's created and sold into the market. So it makes Bitcoin more scarce, which should, on balance, be good for prices. And that's what we've seen historically. If you look at the 12 months following each of the prior three halvings in Bitcoin's history, because this happens every 4 years, the 12 months after the halving have historically been a great time for Bitcoin. That doesn't guarantee, of course, that that will happen again. History doesn't have to repeat exactly, but that's what we've seen historically. And I anticipate that this will be a strong period for Bitcoin as well.
It may not repeat itself, but history does rhyme. Could the halving impact current demand trends, you think, for Bitcoin?
Oh, absolutely. Great question. Yeah. So, if you think about what's driving Bitcoin right now, it's the launch of these ETFs, which have brought 10, 12, $15 billion of net inflows into Bitcoin in a single quarter. Again, going back to that traditional commodity example, we have what amounts to a demand shock happening in Bitcoin from the launch of these ETFs, and a supply shock happening in Bitcoin from these halvings. And they're happening at the exact same time. And so again, that should be net good for prices. We can talk about whether it's priced in or not, but the halving occurring at the same time as we have these ETFs, you're just seeing the demand for Bitcoin be really stretched by the market. Some people have said there's just not enough Bitcoin to go around. Buyers have to search it out in the far-flung corners of the Bitcoin ecosystem.
What do you attribute Bitcoin's performance to so far? We've seen it risen more than 47% year to date already, over 110% over the course of the last year. Obviously, we've had the launch of spot coin ETFs. We got the anticipation of the halving. What do you kind of attribute the price action to that we've seen so far?
Yeah, on a micro narrative, those are the reasons, right? People anticipating the halving and then the shock of these new Bitcoin ETFs. Just to put the Bitcoin ETFs in scale, if you think about the first 15 years of Bitcoin, Bitcoin went from zero to about $40,000 or $50,000 on the back of retail self-directed investors, people managing their own money directly. Those are important investors. But in the US market, they only hold about 20% of the wealth. The other 80% is financial advisors and institutions, and they weren't able to access Bitcoin easily until this ETF launched. So the ETF 4x'd the addressable market chasing Bitcoin, and that just leads to strong price appreciation. But maybe there's even another sort of meta level at which this is taking place, which is that Bitcoin is maturing. It's moving from this alternative upstart asset that people weren't sure would survive to an asset where now you have BlackRock, the largest asset manager in the world, building a business around Bitcoin. That is a very big difference. And so that maturation is being reflected in rising prices. And for what it's worth, JD, I think that's a multi-year trend. I don't think that's a few week trend. I think Bitcoin maturing is a multi-year trend that will be with us, for quite some time.
And what are the big factors that you expect to drive BTC's performance in the future, even after this halving?
Yeah, I think the next wave is the major wirehouses. These are firms people have heard of: Morgan Stanley, Merrill Lynch, Bank of America, UBS, Wells Fargo. These people aren't able to buy the Bitcoin ETF yet. So I think those folks entering the market will give Bitcoin sort of a second push forward in the second half of this year. They need to do their own due diligence and then have their own approval, and then their clients can buy it. That's going to start happening in Q3, Q4. I think that is a very big deal. And then zooming out, what I'm hearing in the field when I go out and talk to investors is that there is sort of rising concern about increased inflation, runaway debt, and fiscal mismanagement in the US. And when people have that concern, they look for a way to hedge it. Some of them go to gold, but increasingly some of them go to Bitcoin. And as we approach the election year and political uncertainty rises up, I think the attraction of Bitcoin just as a piece to hedge your exposure, I think that's going to be sort of another driver at the end of this year.
Of course, Bitcoin's not the only crypto asset going through its own updates. We had one with Ethereum, an upgrade back in March. Walk us through a bit of that particular update change within the Ethereum ecosystem and any relation to the Bitcoin conversation for our investors to be able to piece those stories together.
Yeah, absolutely. So, blockchain is a revolutionary technology that can do a lot of things. People can build a sort of asset that's trying to be like gold, like that's what Bitcoin is on a digital format. And that's a very attractive asset. Or they can use blockchain for other applications, for gaming applications, for DeFi applications, for NFTs. A lot of that is taking place on Ethereum. The upgrade you mentioned was called Dencun. It's a major software upgrade of the Ethereum network. And the effect it has is to increase its scalability and drive down the cost to use Ethereum by a factor of about 90%. I know that sounds crazy for people who are not inside this ecosystem, but literally the cost to use Ethereum fell 90%. And what we know is that when costs fall, use grows. And I think what the Dencun upgrade is going to do is going to catalyze a lot of real world adoption. The analogy I make is sort of to the internet in the early days. The internet was cool when we were on dial-up modems and it went wee wee before we logged in. But then when we got broadband, we had an explosion of uses. We had Netflix, we had Zoom, we had all these new things. Blockchains are going through the same thing. Dencun is sort of the canary in that coal mine that signals we're in this new era. And I think we're going to see significant rising use. It's sort of two narratives at once. Blockchains are being adopted by institutions because they can invest in them, and they're becoming more useful because the technology is getting better. And the beautiful thing is those two things are happening at once.
Yeah, I miss the old sounds of the dial-up, the wee sounds that you made. It's been a while. Shifting now our attention here while we have you, Matt, to the rest of the crypto world. The market cap for all digital assets advanced towards all-time highs of about $3 trillion per Bitwise. Talk to me about other segments or projects within crypto that have stood out to you in recent months. And I wonder, anything that maybe we have not been talking enough about?
Sure, absolutely. I think the sort of undercurrent, really exciting thing going on in crypto, we're seeing a rise of decentralized physical infrastructure projects. So these are platforms that are using blockchain to disrupt worlds that we might not associate with it today. There's a group called Helium, which uses a blockchain network to make using your cell phone cheaper, offers a nationwide cell phone plan for $20 a month. I don't know what you pay, JD, but I pay more than that. And by leveraging this new technology, you're seeing a new application there. There's a challenger to Waze called Hivemapper that's using distributed blockchains to take photos and real time map the world and then sell that back into the ecosystem. So there is a lot of excitement around decentralized physical infrastructure. There's growth in other areas. There's growth in prediction markets. There's growth in sort of decentralized graphical rendering, decentralized social networks. In a way, you can think about it, all the promises that blockchain made 5 years ago, all the things people said it could do, those are starting to come true on the edges. And we're seeing use of these decentralized networks go from a few people to a few thousand people to a few 100,000 people. And that's a pretty exciting trend if it continues.
Yeah, and it's been a really exciting conversation at an equally exciting time. My special thanks there to our guest. That's Matt Hougan, CIO at Bitwise Asset Management. Matt, thanks a lot for taking the time.
Thanks for having me. This was fun.